Pinnacle Advisory Group is a full-service wealth management firm offering comprehensive financial planning and investment management services using an active management philosophy. The best way to evaluate Pinnacle Advisory Group's investment philosophy is to examine how we actively manage our portfolios. Let's talk about what specifically makes Pinnacle's approach different. For many investors, active management means buying and selling individual stocks in the portfolio. Here, stocks are being traded in and out of the portfolio's equity allocation. In this case, the percentage allocation to stocks doesn't change as stocks are being bought and sold. Studies show that portfolio volatility is dependent on the percentage allocation to stocks, not just the selection of stocks. We agree that buying and selling individual stocks constitutes active management versus owning a stock index, but it does not meet Pinnacle's definition of actively managing a portfolio. Active management can also refer to owning mutual funds or separate accounts for each allocation of the portfolio. Because mutual funds and separate accounts are each actively managed, proponents claim that the total portfolio is actively managed. The problem with this is that while each fund is actively managed, the asset allocation of the total portfolio doesn't change. And when the asset allocation doesn't change, typically the volatility and risk in that portfolio doesn't change either. We agree that mutual funds and separate accounts are actively managed, but once again, this strategy doesn't meet our definition of active portfolio management. Rebalancing is a technique wherein asset classes are bought and sold to make certain they match the portfolio's target asset allocation. Rebalancing requires the portfolio manager to sell high and buy low, or vice versa. But rebalancing trades tend to be very small, and with little impact on portfolio returns over the short term. While rebalancing can be called active management, at Pinnacle Advisory, we think our clients need a more robust definition. Okay, now let's review what we mean by active management at Pinnacle Advisory Group. Sector rotation allows us to buy different sectors and industries that make up the U.S. economy. Some sectors typically perform better at different points in the economic and market cycle. By rotating amongst thousands of available ETFs, Pinnacle analysts can change portfolio sector weightings based on their forecast of future economic and market conditions. Tactical asset allocation allows Pinnacle analysts to change the asset allocation of the portfolio if they develop a high conviction forecast of future market conditions. You can see the gradual changes in the allocation to each asset class as Pinnacle analysts adjust their forecast. In this stylized view, the allocation to U.S. equities, international stocks, commodities, and fixed income are all changing based on Pinnacle's view of the markets. Security selection is another important active management technique. We select securities from the universe of exchange-traded funds. You can see that within the healthcare sector, there are many industry choices that could increase returns over and above simply owning the larger healthcare sector. Pinnacle analysts are each assigned different sectors of the stock market to study and spend hours poring over data to determine which ETFs to select for the portfolio. If these techniques for mitigating risk to help protect your assets make sense to you, you could be a Pinnacle client. Click here to speak with a planner about managing your portfolio.